What's going on, guys? What's going on, family? What's going on? What's going on? What's going on? Welcome to tonight's session with your boy Abel. Super excited to be here with every single one of you guys. And it is Thursday, so it is going to be our last session of the week, right? So overall, guys, what we're pretty much just going to do is uh, look at what we could expect the market to do pretty much going into next week, all right? Because right now, we really didn't even move too much for the most part, guys, throughout the day. It was another very choppy day in the markets where we really didn't do much at all, especially for a lot of USD pairs, right? So let's really just talk about projections now going into next week and what we think the markets can realistically do, just by reading structure, reading price action, identifying all those things. Now, from a fundamental and a sentimental perspective, guys, we already know exactly what to expect, right? That has not changed, and it's not going to change, right? So we're pretty much set from the fundamental perspective side. But I really want to make sure that we understand what can realistically happen from a technical perspective, okay? So that's what we're going to be talking about today, guys, is really breaking that stuff down so that you guys are aware of what to be looking out for sure moving forward going into next week, and then possibly even going ahead and for even longer term as well, right? And just I could feel as well, like my throat, my voice it feels like it's about to go away too. So if I sound low, I apologize, family. Right? I do apologize, but we are going to go ahead and, like I said, break down these charts and really see exactly what we can, look for from a long-term perspective, right? But besides that, guys, let's see who we got in the building with us today, right? Go ahead and drop your locations if you have not dropped it just yet, right? I see we got Chicago in the building. Shout out to you guys out there in Chicago. I appreciate y'all. We got Greensboro in the house, Trinidad and Tobago, ATL, Vermont, Ghana, Bronx in the building, Colombo, Sri Lanka in the house, right? We got the Bahamas. We got Jamaica. Let's go. Let's get it. Let's get it. We got Nigeria, Chicago. Nigeria, Chicago. We got Cali in the building. South Side. We got Raleigh in the house. What's going on? Shout out to everybody out here in North Carolina. Right. So like I said, guys, like I mentioned, we're going to keep everything from more of a macro perspective. I will be giving you guys obviously a few setups that I'm gonna be paying attention to going into tonight. But for the most part, I want to really start off by just giving you guys some macro outlooks from a technical perspective overall. And what we can also look at too is to see what we actually have next week in terms of news, right? To see if there's any type of a catalytic event that we should be paying attention to, right? Because the things that can change trends, right, or change momentum, guys, is definitely going to be news and the data that comes from that news, right? So let's see what we have. So next week, right, we actually have a very important news event that's actually going to be going down on Wednesday, right? And it is going to be the Fed's funds rate, right? The Fed interest rate decision, right? This is where we're going to see, guys, if the Federal Reserve is actually going to raise interest rates by 75 basis points again, which is what I believe is what they're pretty much expected to do. Or if they're going to be even more aggressive and do something crazy out the blue, like raising it a full, 100 basis points, right? So that's definitely something that we have to be aware of for next week. It's going to be an absolute crazy week simply because we have interest rate decisions, right? So please keep that in mind, guys. That is a very important That is a very important event that can absolutely cause these markets to move a little bit more, sporadic, you could say, right? Because everybody's going to be on edge to see exactly what the Fed is about to do. Right now, again, 75 basis points is, I pretty much believe, is what the markets have been pricing in already. But overall, we'll see what happens, right? We'll see what comes out with that. But that is, again, next week, guys, we do have that. We actually have a few different interest rate decisions coming out for a few different central banks, right? We also have, the Swiss franc with their interest rate decision, right? We also have the Great Britain pound with their interest rate decision on Thursday, right? So next week is definitely going to be a very volatile week, you could say, right? So it's definitely something we have to be aware of and really pay attention to, because obviously you guys know right now, interest rates are going up, right? And they have been continuously going up to try to combat inflation, right? The whole point of interest rates going up, guys, is to pretty much, promote less spending, right? When you make it more expensive, or when you make it harder to actually borrow, right? When you make it more expensive to actually operate, people are gonna want to actually start sitting on cash. They're not gonna spend as much or as quickly or as fluently as they were, right? So again, these are little tactics, that the Federal Reserve does, right? They manipulate the interest rates to pretty much control spending, right? They have the ability to literally control, all right, how much consumer spending is really happening, right? And that's why they do it. That's why they use this tool with the interest rates, and that's why they change it ever so often depending on the current state of the markets, right? So that's, again, very, very big important things, guys, that we have to pay attention to for next week, right? But overall, for the rest of this week, we really don't have nothing too crazy. We do have retail sales for the pound, but there is CPI data as well for the euro, which is definitely going to be very interesting for tomorrow morning. Right, so definitely, if you're trading any euro players, be mindful of that. Right, they do have their CPI release. Right, that's what's measuring inflation pretty much. Right, so keep your eyes on that for sure. Right, but overall, guys, now what do I think is going to happen for the dollar? Right, so I actually want to give you guys two different perspectives here. Right, because overall, guys, it's very obvious what the trend is. Right, we literally talk about this every single day, and it gets very, very repetitive, but it's very important to understand, right? We have been literally going to the upside for the dollar, right? That is disgusting arrows, right? Where we have just been creating these higher highs and higher lows, these higher highs, these higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, right? We've just been creating these higher highs and these higher lows this entire time, easily for over a year, right? Almost a year and a half now, right? We've been creating these higher highs and these higher lows, right? And very simple. Forex 101 states when we are creating a series of higher highs and higher lows, that is identifying the fact that we are in an uptrending market, right? When we are in an uptrending market, the best thing, our job as traders, is to wait for the best opportunity to align ourselves with the actual trend of the market, right? So now the question that we have here, guys, right, with current price, current structure, right? And I'm only going to use the Fibonacci. I'm not even going to use the Fibonacci, right? I want you guys to understand what our actual now trading range is that we're going to be playing in, right? We have this swing move right here. We have this strong push up that the market gave us, right? And now we are in the middle of what you can consider a pullback, right? Now the question comes in, all right, what can possibly happen next? All right, well, guess what? I truly think, right, it is very possible for price to go down a little bit, come back to retest this level before we. I think that's possible, right? I think it is, right? So let me actually go ahead and just highlight it with an actual zone so it stands out more, right? So I'm saying looking for price to react off of this demand zone right here, right, is probably not a bad bet, right? Looking for a play, somewhere down here, okay? But another thing that we can also consider is price even coming down a little bit lower to these levels, right? That is also possible as well, right? Because we had the demand for the dollar realistically really pick up down here. That really started this entire run, right? So when we're reading price action, guys, this is what we're trying to identify, right? Where did the momentum start from, right? Where are our levels of structure that we can potentially see some type of reaction from, right? This level right here where we actually just had the demand pick up, right? This is the level of structure we want to pay attention to. But the only thing that we have to keep, just keep in the back of our head, guys, when it comes to these type of levels like this, is that these markets are very easily manipulated, right? So although we did see a nice strong reaction out of here, and although it is very possible for price to go ahead and go higher from there, right, it also could be a possibility, right? There can also be a possibility where price might actually want to go ahead and run these lows, all right, before we go ahead and actually go into the actual trend, right? Give us more some like a deeper pullback here for the dollar, right? Now, again, I'm not sure if this is actually going to really happen, right? But it is a very big possibility as well, right? Anybody that trades from, the smart money perspective, right? Shout out to all the SMC traders, right? This is the play that you guys would pretty much be looking for, right? Literally something like this, right? Identifying this level of structure, right? A lot of liquidity below this level right here, right? Because there's people buying off of this area, right? If we have a ton of buy orders placed right there, where's everybody's stop losses? Right down here in this area, right? So this is a pool of liquidity that the market typically likes to actually go ahead and target, right? So the way that again a lot of the smart money traders call it, they see that they're entering at the retail trader's stop losses, and so on and so forth, right? So again, that perspective is also very valid, but I'm also not going to say that the market can't go off from here, because that can also happen as well, guys, right? Again, I really try not to be one-sided with a style of trading, you could say, right? Like, I understand different perspectives, whether it's a retail strategy or whether it's a smart money strategy, right? I understand different perspectives enough that I'm able to incorporate low-key both of them and just make the best decision, or at least understand that my risk to reward is at a level that I can actually take a couple more chances, right? So what I mean by that, guys, is this, and this is a nugget right here, right? If I know that taking a buy off of right here is more so considered a retail entry, right? Because we have these equal lows right here. Price came to these lows, right? And we just continue to react off of it. We create like this little short, it looks like a little bootleg double bottom, right? We have all this imbalance over here to the left. I mean, yeah, there's probably a lot of liquidity here, right? But this is the retail, what would be considered a quote-unquote retail entry. Now, again, there's nothing wrong, right? And I don't care what anybody tells you. I don't care what you hear from. I don't care what you listen to, right? There's nothing wrong, guys, with trading just basic retail techniques. You can be profitable utilizing that stuff, right? Because remember what I want you guys to understand. The most important thing about trading is understanding what the overall macro perspective is. And we get that from fundamental and a sentimental side, right? The technical side, it needs to be as easy as possible, right? So you can do it. I don't care what anybody says, right? But you also have to be aware that you can also be enticed to jump into positions way earlier, and you can easily get stopped out a ton more times due to the manipulation that price actually does, right? So there's a lot of ups and downs and pros and cons, guys, to both systems, both strategies, both ways of looking at it, right? It's just up to you to figure out which one works best with you, and then just be aware of the pros and cons to it. But what I like to do, right, and this is something that you guys can consider doing as well, right? If I see that there's ever a chance, guys, where there's two areas, to look for potential entries from, right, where there's two, POIs, right, points of interest. Whenever I see that we have, two different levels, I just cut the risk in half, right? So I trade and I create my risk off of the actual setup, okay? I want you guys to understand this, family, right? I create my risk off of the actual setup. So the setup here is to look for the buy, right? That's the main idea here, right? My main objective here is to look for the buy, right? It just so happens for this example, I have two different potential points of interest. So if I know that I have two potential points of interest, and you want to try here just so you don't miss out on the trade in case price does just only come down to here and go bullish, because it is very possible, right? Because again, you could wait for price to get down here, but what happens if it doesn't get down there, right? Then you're just waiting there and it never gets there, right? So when you have the situation, guys, just split the risk. So if you're risking 2%, do 1% here, do 2% here, or 1% here, 1% here, I mean, right? Split the risk. So in case you do take an L on this one, that's fine. You only lost 1%, right? For me, and this is literally how I would do it, right? I'm risking 1% here, I'm risking 1% here, because max I risk for setups is 2%. So if I lose 1% here, I don't care. It is what it is. Why? Because now if this one ends up playing out, right, this is a 5-to-1 risk reward, right? Just for right here, and just look at it for, this target up here, right? I only lost 1% here. But if I'm risking 1% and this actually ends up hitting target up here, right now I just made 5%. So I'm still up 4% overall, right? But I was comfortable taking the chance here because I wanted to at least give myself a chance to actually go ahead and ride this move if the market was to go ahead and go from that level, right? Because again, it does happen, right? These markets are going to do whatever it really wants to do at the end of the day. Right, but there's a few different levels, guys, to pay attention to when it comes to the dollar and what we could potentially see moving forward. But this is what I would like to see. Some type of a pullback. Whether it's a simple pullback to here again and go deeper, or if it's more of a complex pullback. Before we go ahead and rebound and then continue in this bullish trend that we've pretty much been in for a while now, right? But if you really look, right, if you actually look at this, like, we really haven't seen, too crazy of pullbacks, right? We had this move here. We had this little choppiness, right? Not too deep of a pullback. This big move here, this one probably corrected around maybe 50%, right? This one right here, we had a very short pullback. This one right here was probably the deepest pullback we've seen, right? So seeing something like this in the market going from right there, it wouldn't be surprising, because we have been seeing, throughout this entire trend, the demand is just so strong that these pullbacks are, so smaller, right? They're so much weaker, right? So yeah, we have a lot to pay attention to, guys. Now again, next week, with the actual interest rate decision next week, is definitely going to be very interesting to see to see what the market actually ends up doing, right? If, depending on what it actually comes out as, if the dollar starts flying off of the reef or if it actually gets weaker, that's going to be very interesting for sure, right? But as of right now, guys, for the federal funds rate, uh, they are expected to, again, I believe, raise it 75 basis points. I'm actually going to go ahead and bring it up to see exactly where we're at with this. Let me see. All right, the Federal Reserve. Let me see. Apple cider tea, brother, for the throat. I appreciate that. I don't think I even have any though, but I will get some tomorrow if my throat is still feeling a little ill. Right, let's see. Alabama in the building. What's going on, Tina? Good to see you in the chats. I have never traded the dollar, right? So I don't trade the actual dollar itself. I just use this specific index just to give me like a bias overall for what I think everything else could do, right? This is like a gauge. This is like my blueprint. I do my big analysis, one of my main analysis, like my first. Anytime you guys see me come to the charts, the first thing I always look at is the dollar, right? Because if I figure out what that's doing, then I know exactly what everything else is gonna do. All right, I know exactly what everything else is gonna do for sure. Right, but overall, guys, we just been very choppy. Like I said, all day today, very choppy, very choppy. So, we just gotta continue to be patient and see what the market gets us. Let's go ahead and see and take a look at what we got moving forward. So, looking with Euro USD, guys. I mean, again, if it's doing the exact opposite of the dollar itself, so we are still very much bearish this opportunity here. It's the same exact concept though, right? Are we just gonna pull back to here or shorter pullback like right here and then continue bearish, which is very possible, right? Or could we actually see a deeper pullback a little higher, right, all the way up to these highs, to then go ahead and get back into that overall, bearish trend, right? It's very possible for either or of these situations to actually occur. It's just more so important, guys, to be aware of what can actually happen, the possibilities, right? So then you can actually react to both if needed, right? Again, there's nothing wrong with taking, an entry right here off of this, area of rejection, right, where we clearly seen selling pressure come into play. There's nothing wrong with that, right? Because there was evidence, and there could be a chance for the market to react off there. Just lower your risk, right? Lower your risk. And there's also nothing wrong with, really entering up at these levels neither, right? Where we're pretty much back up at these highs, right? And up here is important because this is where that selling pressure ultimately started that caused us to eventually ended up breaking structure to the left. All right, so if we do not sell off from this level from Euro USD, this 1.009 level, then yeah, assume that we're gonna go all the way up to the 1.02, and then from there we can go ahead and start looking for some more shorting opportunities here for the euro. Right, but overall, guys, I'm still very much bearish. Nothing has changed. Sentiment hasn't changed. So as long as again, like I keep saying it every time, but it's important for you guys to really get this. But as long as the Federal Reserve is expecting to continue to raise rates, we have to continue to expect the euro to continue to drop. That's just the reality of the environment that we're in right now, right? And that's why it's important, guys, to understand that market conditions do change, right? And the Federal Reserve has the ability to change market conditions, which is why it's so important to be up to date with a lot of these decisions like interest rates that the Fed is actually making, right? There's a reason why you can have a profitable strategy 1 month, but then the next 2 months it seems like your strategy is not working, right? It's just because the environment, the landscape has now shifted. You have to be able to adjust, right? There's going to be times where a scalp is a scalp, right? A scalp in season, but then there's times where the day trade is probably the best move. Again, it really depends on the environment. All right, I mean, this environment right here, this would have been swing trader central, right? Just understanding that we are so bearish simply because, again, the dollar is just so much more in demand, Imagine if you would have just, you know, entered up here, caught this whole drop, right? Held it, entered here, right? Caught the next drop, held it, caught the next drop, right? Imagine that, like, this would have been lit if we could have, caught some moves from the high and just continue to add into positions, add in positions, scaling into positions, right? That would have been pretty cool, right? But the whole point is just, again, it's all about understanding, guys, that market conditions do change, environments do change, right? The Federal Reserve has the ability to do the changing based on what they say, based on the policies that they decide to implement. They have that much power and control, right, when it comes to valuations of these currencies. So we have to be aware of that stuff too. That's what's giving us our edge in the market, right? That's probably one of the biggest edges that we can have, is knowing exactly what the Federal Reserve is expecting to do, right? If you know what the Fed is expected to do, then you should have a very good understanding of what the markets are going to do. That's a fire edge in the market right there, guys, right? That is next level, right? That type of edge is giving you such a heads up as to what these markets are about to do. You just got to be able to read the details, right? You got to figure out the details, though, behind, all these speeches and these press releases, from Jerome Powell, or and this correlates, guys, with every central bank, by the way, right? I'm not just, it's not just the Federal Reserve over here in the U.S., right? But it correlates with every central bank and, the head of the central banks. They have the ability to really shift, how money's flowing through economies, right? That's why it's so important to be aware of it, right? So overall, guys, we definitely have two different areas to look for some opportunities from. This area right here, again, is not a bad opportunity to at least, attempt a trade off of it. Something like this wouldn't be bad at all. Seeing how this pretty much plays out, targeting back down to the lows, ultimately probably targeting even lower you can, because again, we still are very much bearish, and I'm expecting the market to go ahead and run these lows over here. All right, but for now, we could just leave it right at the lows, and this is a nice 3.5 to 1 risk to reward right now. Again, it is obviously a little bit of a wider stop loss, just because I'm looking at it from a bigger perspective. We're on a daily 4-hour time frame. If you want to go ahead and tighten up your stop loss, all you gotta do is really go inside of here, right, and really start to fine tune what you're looking for in there, right? Whether it's looking for some order blocks, little mini imbalances, whatever it is, right? You want to go ahead and go to lower time frame. Like right now, I'm on the 15-minute. Now I'm on the 5-minute, right? And in here, you just want to look for, some type of area of confluence that can give you, a heads up as to where this market can really, really shift from, right? So what I'm looking at now is I'm really just looking at, levels of support and resistance inside of here that can give us a reaction. Right, so I'm highlighting this level right here. Whoop, that's an ugly circle. All right, so we have this level right there. All right, that acted as support. Price broke through it, acted as resistance. Right, price acted as support and resistance over here again. So this could be the area where price actually eventually gets up to. Right, and again, this is bigger time frame. I mean, this is smaller time from right now, but this whole play is looked at it from the bigger perspective. So this is a lot of moves to the upside, right? But, this is pretty much how you fine tune your entry, right? You will look for evidence. You look for confluences on this smaller time frame, right, to go ahead and get a much tighter stop loss, right? So now we went from a 70, 60 pips to now around a 30 pip stop loss, right? And that's definitely really good, because now our risk to reward is almost a 10 to 1, right? And that is just absolutely insane, absolutely bonkers, right? So that's why this opportunity, guys, looks so attractive, right? And why it's worth the risk, because the risk to reward is still there. The risk to reward is still looking pretty juicy, right? So something like this is not a bad opportunity. Looking to enter up here around this 1.0165 level looks pretty yeah, it looks pretty good, right? With maybe around a 35 pip stop loss. Right, not bad. Targeting almost 300, right? So yeah, keep your eyes on that one. Again, longer term play though. If I can get an entry on this, I do plan on holding it all the way back down to these lows. Okay. Let's see what we got here. Hit that like button one time. Definitely appreciate you, Jake. Right, definitely, family. If you guys are getting some value, go ahead and smack that like button. You guys know the routine here. We're definitely trying to blow this new channel up, right? Because again, this is the newer channel, family, that we just launched, right? For the newest community that we're about to launch very, very soon. Within the next month and a half, we will be launching, right? The next, the best, the biggest trading community in the world, right? It will be within the next 5 years. It will be the biggest in the world, guaranteed. Right, so yeah, go ahead and definitely smack that like button. Right, it definitely helps out with the video. Helps YouTube to know that there's a lot of great value and content being spitting. So I hope them share our stuff out. Right, and I appreciate you guys. All right, let's see what we got here. Sometimes when trading, you gotta fly like a butterfly and sting like a bee. I agree with you. Why don't you take a buy to fill in all that fair value gap to the left, right? So you can, right? And again, it comes back to understanding what we're doing. All right. I always talk in terms of looking for the setup to stay with the trend, because I also know that we have a lot of newer traders on the call, right? And you're always going to have the highest probability of winning when you're actually staying with the trend. Okay? So yeah, if you are more experienced, by all means, yeah, you could definitely look for some buys, somewhere up in these levels. Sure. Right? Go to smaller time frame identified. Right? So you can see if you could try to go ahead and close a lot of this, imbalance, right? A lot of this clean traffic that we have right here, whatever you want to say, whatever you want to use, right? It's very possible for sure. But the overall bigger play for me is still definitely going to be looking for that overall sell. All right, but yeah, I definitely see what you're saying. You can do it if you're experienced. If you're still a newer trader though, right? If you're either a newer trader or you're still trying to, get consistency down packed, then just try to stay with the trend, right? It'll just be a little bit easier for you to start to see some wins. All right, but this is not a bad play here, right? Not a bad play here for Euro USD, guys. It does look very, very juicy. All right, so let's go ahead and take a look and see what else we got here for the other USD pairs. I mean, they're going to be very, very similar, guys, to what I was just looking at with Euro USD. AUD USD right now is just playing off of this level of structure, but if we can see price maybe make its way up into these levels up here, this can give us a nice opportunity to really go ahead and go short on too. All right, somewhere up in these levels looks very, very attractive. Right now, again, I'm gonna keep the stop loss just wider, just because we're on the 4-hour. But just like I said, just like I did earlier with Euro, you can always fine tune it by going into the smaller time frame and looking for those key things like maybe a smaller term imbalance, an order block, a level of structure, confluence, right? All those things to really make your stop loss a little bit smaller. But for the most part, guys, this is really what I would be looking for, right? If we can make it up there, then I think that would be a nice opportunity to go ahead and go short, right? But the key word there is if we get up there. I really don't know if we are or not. Price right now is respecting this level, and again, be honest with you, there is a very good chance for price to just go ahead and go bearish from there. But for me, I wouldn't be interested in taking no type of sells from down here at these levels. Right, the only way that I would be looking for a continuation sell is if we see a deeper pullback first. Right, that's what I would be looking for AUD USD. All right, so that one is AUD USD. Let's see, if consumer sentiment beats projections, that's bad for inflation. I mean, consumer sentiment itself is just pretty much telling us how everybody's approaching the markets and the state of the economy right now, right? So let's see, if consumer sentiment comes out and it starts to show that sentiment is starting to be more optimistic, right, where there's a lot more faith, right, they're more faithful, they're more hopeful, then you'll see indices rebound, right? You'll see the dollar absolutely start to weaken, right, if something like that actually happened, right? But if consumer confidence actually came out lower, then we're going to continue to see a strong dollar, right? Then we're going to continue to see weaker indices overall, right? So consumer confidence is just pretty much telling us exactly how people are approaching the markets right now, the state of the economy, right? And that's what's going to dictate consumer spending, right? Which is obviously going to help and play into inflation, right? When people don't have, faith in the markets, right, in the economy, they tend to go ahead and hoard, right? Hoard cash, sit on cash, start to save a lot more, right? They do less spending. All right, so that's pretty much what it comes out to. All right, but let's go ahead and see what we got for UJ. Yeah, let's go check out UJ real quick. All right, let's see. So at work, I sometimes have to sit at my company's board meeting. Long story short, some of these board members work for investment firms and big name banks. Abel does a better job explaining what is going on in the markets, just as good, if not better, than these people. I appreciate you, Maria. I really do. All right, that means a lot. All right, so let's see what else we got here, guys. So UJ, right? I mean, similar play here. Obviously, we're still very much bullish. It's just the same concept, right? Now we're just at very extreme highs now. Compared to this most recent run that we've been in, right? This run started back in August, right? So pretty much we've been just pushing and pushing and pushing, guys, literally for the past month here for UJ. Now, like always, there's going to be moments where we could experience deeper pullbacks. All right, it is very possible for this to actually happen, something like that, before we actually go ahead and continue going bullish. But it's also very possible for this just to have no care and not worry about no damn pullback, right? But as of right now, the only thing that we can utilize, right, to really help us identify on what this thing can actually do is key levels, right? Structure points. Okay, so what I'm doing now is I had to go all the way to the monthly time frame, right? Just to really look for, some type of levels of structure to see where we're pretty much at right now, right? Are we at a level of structure on the bigger time frame? Is this an area where we could start to see, the demand for the dollar against the yen start to fall, right? And we are at actually very interesting level, right? We are at a level of resistance, a level of structure right here. Where last time we were actually up at this level, we did actually see a pretty interesting sell-off. Okay, so that's clue number one, right? That we are actually at very interesting level. Now, the second thing we want to do, though, right, is we actually want to see structural shifts, right? Because it's cool to say that we're at this, this level, but as long as we're still continuously making higher highs and higher lows, at the very least, as long as we're continuously making these higher lows, then we got to be very, very mindful about that, right? So what I'm saying by higher lows, guys, is this, right? We see higher lows, higher lows, higher lows, higher lows, higher lows, right? Higher lows, higher lows, higher lows. All right, obviously right now this is just going, but we've been creating these higher lows, right? This is telling us that momentum is still very much potentially very bullish. All right, so as long as we continue to make these higher lows, then I'm just going to be expecting more upside. But the moment that we actually start to shift, see, then we can realistically start to expect a deeper pullback. Okay, so that's what I'll be looking for, guys, right? I would really need to see price possibly go ahead and run these lows, right, in order for me to actually want to be able to sell. Right, that's just me, right? I need to see I need to see this low, possibly being taken out. Okay, I think there's a good chance for that to actually happen. Um, but I also expect the dollar just to be so much more dominant than the yen. Right, definitely a little bit mixed in between in between what I think can actually happen and what I also think is also a very big possibility. But overall, I'm still very much bullish this, right? That's the main factor. I'm still very much bullish. We just gotta keep in mind that there is potentially a time for us to actually go ahead and actually give us some type of a correction. So with that all said, now what is there anything that we can do now to position ourselves for the next move? I mean, well, where the market is at now is actually very interesting because this is obviously where we did have, off of news, the big old reaction, right, off of CPI data. So with this type of reaction, guys, it is very possible for us to actually experience, just bullishness right off of here. Right? So if I'm looking for the buy opportunity, it's gonna be down at these levels. So if we could see price to come back down here, right around this 142.5, that could be a very attractive opportunity to go ahead and get in for the buy, right? Or, I mean, even depending on how structure plays out here, right? If we do see price end up breaking, this level of resistance, this level of structure, then that could definitely potentially lead to some more upside as well, right? But yeah, overall, the main outlook is probably to go ahead and just expect more continuations. And if we get a break of structure, then we'll go ahead and adjust from there, right? But for right now, I'm really liking the opportunity just to continue going ahead and looking for more upside. Let's see what else we got here. Can we check GBP USD? He does have a good concept knowledge about fundamentals. Appreciate you, Abel. I appreciate y'all. I really do. Right, so yeah, let's go take a look at GBP USD. Right, so GU also very, very interesting. Now, this one actually did end up pretty much closing as like a bearish engulfing, showing that there is still a lot of weakness here for the pound. So yeah, there is, there is a good chance for price to realistically go ahead and start going bearish from here. Obviously, for me though, I'm not interested in taking those shorts from these levels personally. Right, I'm really not. Just because we're already at a very interesting level of support where the market does not have to actually break. Right, like yeah, we do expect it to eventually break, but trying to sell right at a support level is very dangerous because this market could actually just pull back before we eventually end up breaking. Right, so that's one of my rules, guys. Right, when it comes to selling, I don't sell at a support level, just like I don't buy when I'm directly at a resistance. Right, that's just me. I don't do that. Right, so I wouldn't sell here, personally speaking. So I would need to see some type of a pullback up to then go ahead and get an entry to ride this thing out. Where can we pull back up? Well, we can go ahead and just use structure to the left. Right, we have this entire level of structure right here, right, that we can also utilize as an area of interest that we can go ahead and look for some opportunities from. Right, now, can the market actually go higher to go ahead and maybe test, all the way up there? It's possible, right? So if that's the case, then maybe you have to be aware of that and adjust your stop loss to account for that. Right, but overall, I think that this is a very interesting level to look for some shorts from. Right, this 1.162 level, right, 1.162. Right, that one looks very interesting for sure for GBP USD. Right, let's take a look at GJ now. Right, again, see what GJ's been up to. Right, because now, I mean, GJ looks to just be bearish right now. Right, for at least right now, guys, I think we're gonna probably come all the way back down to this pretty much range that we were in for that entire month that we were just dealing with so much choppiness out of GJ, right? But it just seems like right now we're definitely going to end up coming back into these areas, and then that could just give us an opportunity to go ahead and ride out another long-term buy. Hopefully we can catch another strong move like what we've seen here, right? Two big old candles, right? Daily candles, right? This was literally around 400 pips, right, in about 2 days, which is absolutely insane, right? So, but that's what we can that's what we could possibly see, and that's what we could possibly expect too, guys. Right into this area. We can start looking for some opportunities to go ahead and go long. But overall, for right now, I still think we have some more downside to go clearly, right? So looking for a short, it's probably gonna be what I will be looking for going into tonight, right? Going into tonight, going into tomorrow. So yeah, that's what I'll be playing. Right, and this don't look too bad neither right here. Right, to then go ahead and ride us into that level. So, keep your eye on GJ. This one actually could be something that you could possibly play tonight. All right, possibly play this one tonight, something like this, which is not bad. All right, so yeah, that one's interesting. Very, very interesting, right? But I do think we're just, in the middle of right now of this pullback for GJ. All right, let's go take a look at the indices really, really quickly. See what these indices are up to right now. These ones have been pretty much moving. And, I mean, just like we've been expecting, they have been very bearish. Overall been just dropping. And I think that we still have, obviously, a lot more room to go to the downside, in my opinion. If I'm being honest, guys, like I truly think that this right here is like nothing. This drop that we've been seeing, right? Since we started to actually correct, which was pretty much at the end of last year, right? Since the beginning of this year, we've literally just been dropping. Right, so ever since then, guys, right at the lowest point, this market corrected around 34%. Right, the Nasdaq, right, the Nas 100 ended up correcting around 34%. Okay, I think we still have a lot more downside to go, which is what's kind of crazy for these indices, right? Because again, depending on how bad this recession actually does get, you know, we're gonna obviously experience a lot of lower pricing, for a lot of these indices. That's just the reality, right? Because the only way that we're gonna be in a recession for a prolonged period of time is if we're consistently, right, consecutively contracting, as a whole from our economy, right? If our GDP is contracting consistently quarter after quarter after quarter, then yeah, that means we're in a recession, right? And it's going to be prolonged recession until we finally start to rebound, and then we finally start to see expansion once again in GDP numbers, and we start to see growth. But overall, I still think that we have a lot more downside to potentially go, in my opinion, of course, right? But that's just my guess. I think we still have some more downside to go here. So I'll be looking for opportunities to go ahead and go short. And that's gonna relate to pretty much all these guys, right? So it's gonna be the same thing for the S&P. It's gonna be the same thing for US 30. Looking for shorting opportunities, right? So going into tonight, pretty much looking into tomorrow, I would like to see if we could possibly come back up to these highs right here, right? And then from here we can go ahead and look for some more shorts, right? Obviously we did end up selling off today, at New York Open, but if we could see the market come back up into there, maybe stay down here before, all throughout London, that would be cool. And then right before New York starts, we start to push up, get an entry, and look for a continuation. That looks that looks like something that I'll be interested in for sure, guys, for Nas 100, right? And again, it's gonna be similar to the SPX. It's gonna be similar to US 30, right? Because they pretty much all move in unison for the most part, all right? But I think we could see more downside here for sure. All right, let's see. Can you look at USD CAD? Yeah, let's take a look at it. Right, so USD CAD is, I mean, this thing is still pushing right now. Right now, remember we've been talking about USD CAD as well, guys, for a little while now, because USD CAD is at a very, very interesting level. All right, and now I want to use the wicks to wicks, the wicks to wicks, just excuse me, just so that we have the extremes marked off. But at this point, guys, I mean, we're definitely gonna go ahead and at the very least retest the top of this channel. But just like remember what I told you guys, I said that there's a good chance for us to finally even break out of this range and potentially even continue going higher. All right, so that's what we have to be aware of for USD CAD. But overall, I mean, I think that for the short term, at least for right now, we definitely could see a little bit more upside. I think probably maybe around like 50, 60 more pips until we get back up into the top of the channel, and then that's what we just got to be patient and see what the market ultimately ends up doing. Overall, though, you know, literally since the entire time, I mean, literally since the past year and a half, I mean, we have just been respecting this entire range right here, right? So, just keep that in mind, guys. That's why I will be very careful when we do get up into there, because you never know, right? The market could run it and then continue going bullish, or it can come up to there and actually go ahead and short and go bearish. All right, so that's very possible, and so I wouldn't be surprised if that actually did happen, where we ended up coming up here and turn around. All right, so let's go take a look at GBP CAD. Yeah, so for me, I mean, yeah, so that's what I would want to do. I'll just keep my eyes on USD CAD, but let's go take a look at GBP CAD. Right, there's nothing that I will be interested in taking in. I wouldn't take no trades on USD CAD right now, personally, though, right? But let's see what we got here for GBP CAD. This one is very interesting, guys. Now, I actually looked at this setup with y'all. I think I gave this to you guys last week to keep your eyes on it, and it's still very valid, right? It's still a very good-looking setup. So, I'll still be keeping my eyes on this one to see what we can get here. But I just want to look for the shorting opportunity, guys, up in these levels right here, right around that 1.527 level. So if we can see price make its way up there, then I'm very interested in actually go ahead and shorting GBP CAD, right, and selling this thing all the way back down, right, to these lows, so I can go ahead and cash out 250 pips, right? Nice move right there. 250 pip bag, right? Risk to reward is 7-1, which is absolutely amazing, right? We are going to be making 7 times our risk, which is absolutely next level, right? That's how you really win in this game, all right? Because you're not gonna win every trade, right? You're probably gonna end up realistically, guys. Like a lot of the good traders that I know that are actually really really profitable, they're only around 40-50% accurate, right? So you're striving to be 100% accurate, and your emotions do not allow you to trade the correct way because you're not 100% accurate. But yeah, we have the professionals that are only around 40 to 50% accurate, right? We got to make it make sense, guys, right? Um, but the reason why you can be 40, 50% accurate, 60% accurate is because of risk to reward, right? When you have risk to rewards of 7 to 1, 4 to 1, 5 to 1, 6 to 1, so on and so forth, right? It allows you to literally maximize your wins. Like you're maximizing your wins tremendously. And that's the name of the game here, right? So yeah, this looks very good, guys. It's GBP CAD, so that's something I'll be keeping my eyes on for sure as well going into tonight. But for the most part, guys, it has been again just a very slow, choppy week for the most part. Just because again the news was very big. That CPI release did actually shake up the markets crazy, and yeah, it's just been that week. I really didn't take too many trades this week. Um, just because I've been expecting it to be choppy. I mean, I've been telling you guys too pretty early, like in my Telegram, that I expected the markets to be choppy, and that's exactly what they pretty much were, right? So let's see. Can you look at Euro AUD? Yeah, let's take a look at Euro AUD. Right, I actually looked at Euro AUD earlier, right, and I was very surprised that this thing is still pushing up right now, but it is very very choppy. Right, I'm telling you guys, right, this thing is very much bearish. It's just a matter of where. I mean, right now it's starting to drop, right, and it is Sydney session, so this thing could very well drop from here, right? But I am gonna be looking for this eventual big sell-off, right? I really do think it's going to eventually come into play. Is it gonna be up in these levels right here? I mean, it is very possible, right? But yeah, I like the shorts. I like the shorts for Euro AUD still. All right, I still do a long-term perspective of it. Yeah, I definitely like the shorts for Euro AUD for sure. All right, so I'll be keeping my eyes on that one, seeing what the market ends up doing, and yeah, we'll take advantage of it if it actually ends up showing for sure. Right, but besides that, family, all right, again, there's really not much else that we can talk about, cause the markets really ain't do nothing, right? Nothing has changed. Right now, it's just a matter of being patient, understanding your overall directional flow, right, which is what we've been pretty much talking about, and then just being patient with finding your entries and just following proper risk management. You'll be good to go. Right. So besides that, I do appreciate you guys for rocking with me tonight. As usual, I do this for y'all. I am a servant leader to be here and just help you guys out in every single shape, every single way, shape, and form. So take advantage of it, guys. Right. Make sure to be subscribed to this channel as well, because we are going up on this channel pretty consistently, guys. Moving forward, it's not just me. Right, there is going to be my other business partners as well, who are all really really good traders. Right, they're also going to be hosting live streams on this channel, just teaching you guys their way of actually analyzing the markets. And trust me, you want to pay attention to all of them. Right, so family, I appreciate you guys. I love y'all. I will be back again on Sunday for our weekly outlook, and I will have the gang with me. So be prepared for our Sunday call, guys. It is going to be an absolute banger, and I look forward to go ahead and teaching you guys on Sunday, right? So, family, I appreciate y'all. I love y'all, and I'll see you guys later. Let's get it.